Hello, good afternoon. So I just wanted to start off with a question around the reimbursement code. There was a story in the Times on the 6th of December that headline, slightly alarming headline, banks plan to kill off fraud refunds. And obviously in the middle of a pandemic, with the concerns for vulnerable customers remaining an issue, I just wanted to hear from each of you about whether you've got plans to do that, and whether you think if the current arrangements or any watered down arrangements damage those who are vulnerable as customers and put them at further risk of scams, that government should be looking at making that code mandatory. Who'd like to start? David Oldfield.
I'm happy to. Thank you. So we very much support the contingent reimbursement code. It's just been extended, as you will know, by 6 months till the middle part of next year. We are very supportive of that. We would support making the code mandatory because we think that would provide more consistency through legislation if required. I think where we all need to get better, and this is not just the banks, this is industries as a whole, and this is working with telcos and such like, is recognising that most APP fraud comes from fake websites, it's purchase scams, or it's spoof SMS emails. So I think we talk a lot about reimbursement, and that's a right and proper focus for all of us. We all need to get better at stopping fraud at source.
Okay. Anne Bowden.
Yes, Starling didn't have to join the contingent reimbursement model. We didn't have to join the CRM, but we felt it was so important. We have a very horrible situation at the moment. More and more business is going digital. More of the economy is moving to places where people are buying things online or communicating online. And in that environment, more and more fraudsters are attacking it. At the moment, CRM is not, not everybody has to join CRM.
Yep.
And what we need to focus on is actually stopping the fraud rather than the reimbursement scheme itself. We need to do both.
Do you think it should be made mandatory?
I think it needs to be. What we need to start figuring out is, as an industry as a whole, and not just the banks. I mean the.
Sorry, but that was my question. I hear what you're saying, and it's a point well made. Should it be made mandatory?
Yes.
Okay, thank you very much. Because I've got some more questions, so that's why I'm probing you. Susan Allen.
Yeah, I was going to support the points that Anne and David have made. You know, I think that when we look at the impact that these frauds have on individuals, even if they get reimbursed, the impact on individuals is just awful. I mean, I've seen people who've been taken in, and particularly things like romance scams, investment scams, and even when they get the money back from the bank, that doesn't solve it for them. They feel as if they've been stupid when in fact they've been socially engineered, and it's very traumatic. So I think all of us are united in feeling we need to focus on getting after the scammers, getting after the fraudsters who are serious criminals who are taking this money.
And do you recognise this story? Because a number of banks were involved in this discussion about watering it down. Are there any plans? Can anyone confirm whether there is a plan to water down the current code or not?
I think that the commentary may have been taken from response to a consultation, and may, from what I understand, may have been taken slightly out of context. But I think there was a point made by the UK Finance Return about trying to make sure that there's real focus on those life-changing situations, and that potentially some different treatment of payment scams. But I just read
because the story suggests that Lloyds, Santander, NatWest, TSB, Nationwide were part of that discussion. And if the proposal does go ahead, consumers would lose about £67 million if this code is watered down. So can each of you confirm that your banks are not supportive of such a change, which is going to basically cost consumers another, deny them 67 million? could we just have that reassurance from you that you're not party to wanting to water it down?
Yeah, so I can confirm from HSBC's perspective that we're not party to wanting to water it down. We are supportive of it being put on a statutory foothold because we think that will ensure fair and consistent outcomes for customers. To Susan's point, the victims here also are most vulnerable customers, and we need to take the steps to protect them. But at the risk of sounding repetitive, this has to be a whole system approach to tackling fraud.
Very, it's a point well made, and I certainly support that.
Thank you.
Can anyone else just address? Can others just address this particular point about whether they recognise this point, whether they're part of a discussion to water it down or not? Yes or no? Paul, you haven't.
So I don't recognise the article you quote. We were NatWest was one of the founder signatories of the voluntary code. We remain supportive of the contingent reimbursement model. We do, like my colleagues, think that the whole approach needs to be a broader one where we really attack the fraudsters and the scammers. But I know you've accepted that point.
Yeah, and okay, wonderful. David, very briefly, because I want to get on to
very briefly. I don't get the watering down point. I don't understand that. We were along with Paul, one of the signatories up front. We remain very supportive of the code.
And similarly for Santander, from the beginning, and we want to see a good solution for our customers.
Wonderful. I know that will be reassuring to many of our constituents. Thank you very much. Just on the issue around overdraft charges, obviously you'll all be familiar about concerns and including from the FCA. The charges by NatWest, HSBC, Santander, Lloyds is exactly the same for overdrafts. Barclays 35%, Starling 15, 25 and 35 depending on credit scores. So apart from Starling Bank, others are charging the same rate. Can you just explain what's behind the exact same rates and how you've all arrived at the same rate? It looks like a cartel. Who wants to start? Susan, do you want to kick off?
So nobody wants to start. So first of all, it absolutely is not a cartel, and I can be categoric about the fact that there was absolutely no discussion or engagement across the banks on in this rate. All of us took our own decisions, and we certainly took our decisions through our executive committee and through the board, setting out a range of different options around overdraft pricing. Where we see overdraft pricing is sort of, we have to look at a spectrum between things like a secured lending, which is obviously something like a mortgage, through an unsecured lend or a credit card. And bear in mind that overdrafts are meant for infrequent use. So I know that the rate does sound quite high, but obviously bear in mind that the rate is meant to be for infrequent use. Where we see customers who are struggling and who have to make regular use of their overdraft, we encourage them to have a conversation with us, and we do have alternatives we can offer to customers who are finding that they're struggling with their debt and they need some support. So, and we absolutely take that responsibility to help our customers very seriously.
So you'll all appreciate 40% is a pretty scary rate. And I know that there have been deferrals at the moment because of coronavirus, but we know from the evidence sessions we've had that debt is increasing, especially for those on low incomes. So this is very concerning. Can I just, to others, if you could respond to this point in relation to your banks? David's hands up. Isn't this anti-competitive behaviour though? It's not effective competition, is it? If so many banks have exactly the same rate.
Well, this is not my part of the business, but I was part of the executive committee decision where we considered all the alternatives. So I can absolutely tell you that we decided, based on what we saw as the pros and cons, to get to the rate we got to. I would echo what Susan says, that overdrafts are very useful for customers who want to borrow some money for very short periods of time. They are not intended for long-term borrowing. We were the first bank back in 2017 to remove fees and charges for unarranged overdrafts. And we've now, as most banks have moved to a risk-based pricing model. So whilst the majority will pay, in our case, 39.9, there are other groups of customers, those who have got a Club Lloyds account, for example, who will pay 29.9. So there's a range of prices in there. But to echo the point Susan made, if we see evidence that someone is using their overdraft for more than just fleeting moments of need, we will be very proactive in having a conversation about different ways of meeting their requirements.
Okay, Paul, do you want to come in?
Yeah, thank you. Similar to David, this isn't my area of the business, but I do know that it was a carefully considered decision that we took independently. In the danger of repetition, we're very alive to the fact that overdraft should be for very short-term borrowing. There are a range of options available to customers. We reach out proactively to customers to provide different types of support or advice depending upon their borrowing requirements, be that secured or unsecured. So that's how we approach it, and we'd always encourage the customer to have the right type of borrowing reflective of their specific circumstances. We also have very specific procedures, I guess linking your 2 points, for vulnerable customers to ensure they have the right advice and the right approach.
Okay, I'm just going to bring in Amanda because there's just a wider issue now, especially given what's happened with coronavirus. People are going to be more indebted and are using overdraft in a very different way now because people are in distress. Do you think that there is a need for the government to look at this more holistically? I understand why banks are doing what they're doing, but is there a case for intervention and support from the government to help those who, to avoid them getting trapped in these very high interest rate overdraft schemes over and above what you're do?
So I think that there's a need for more education around this. I think that's a very fair call. When we look at what we've done, again, echoing my colleagues here, there was certainly no cartel. It was at the request of regulators to make it more transparent and fairer for customers. In advance of introducing the fee, every customer who was a regular or frequent user of overdrafts was contacted to see if there were better ways to achieve their financing. For 70% of those customers, it was no impact or indeed cheaper than their previous fees. And we've provided a buffer of £25 to make sure that if you just go slightly overdrawn, you don't have an impact. That was increased to 500 during the crisis. But more importantly than that, I think banks are now looking to communicate better with their customers around this. So for example, at HSBC, we send millions of texts to our customers to say, you're getting close to your limit. You have 24 hours, 48 hours to bring yourself back into order, etc. before fees. So there's that piece around that communication and encouraging customers to talk to their bankers about other ways to finance themselves. Susan mentioned some other products. Some of them are much more suitable when there is a prevailing need.
Well, thank you very much. And can I just say thank you on other fronts for the work you've done during the pandemic for our constituents. Thank you.
Thank you.